Hey guys, welcome to another Damilola Forex Academy video. In this video, I'm going to be showing you all how I analyze using the multi-time frame approach, simplifying trading using a simple price action multi-time frame analysis system. Okay, it's going to be a simple system where I analyze from the biggest time frame available to us on the market, the monthly time frame, down to as low as the 30 minutes time frame to pick a trade entry opportunity. So I would want you to grab your pen, grab your book, and write down every single thing I'm going to be talking about in this video. Let's go, guys. The first thing we do when we open the charts is to come to the biggest time frame available to us, which is the monthly time frame. And on the monthly time frame, we try to identify the overall structure of prices. Okay, we all know that if prices is making consecutive higher highs and higher lows, it indicates a bullish structure. And if price is making consecutive lower highs and lower lows, it indicates a bearish structure. Okay, so that is the first thing we come and do on the monthly time frame, as it is going to help us to know what to do on the small time frames where we are going to pick an entry from. Okay, so we're going to start from the high right here. Okay, we'll take it to the low. Then this is a lower high. This is a lower low, right? Then this is a lower high, and this is a lower low. Okay, one thing that is very clear with prices is that it is clearly on lower highs and lower lows. Okay, so this is a lower high because it is lower than this high. This is also a lower high because it is lower than this high. Then this is a lower low because it is lower than this low. This is also a lower low because it is lower than this low. Okay, so it is very clear that we are on clear bearish structures of lower highs and lower lows. This means that any buy opportunity that we are picking, the buy opportunity, the maximum we can trade to is the 61.8, because at that 61.8, it's a key reversal area, and prices can turn the 61.8 to another lower high, only for prices to continue by going down to make continuous lower lows, because price is on clear lower highs and lower lows. So it's going to go to a key value area, create another lower high, and go down and continue its continuous bearish structure of lower highs and lower lows. Okay, so this lets us know that, like I said, if you are trading against the natural flow of the market, here the natural flow of the market is bearish. So this means that what if we're having any bullish opportunity, okay, at this point, if we are picking any bullish opportunity at this point right here, the maximum we can go is the 61.8. And at 61.8, if we see a break of any structure there, we are going to sell to the 100.0 of the broken fractal. We are going to go check the fractal that was broken and sell to the 100.0 of the broken fractal. Okay, so whatever fractal is broken there, will sell to the 100.0 of it, because eventually price will create a lower high, and at the end of the day it will come to the 100.0 of this big fractal. Okay, but we are going to trade within the fractals available to us. Okay, so now that has been done, the next thing is what? As prices hit the 61.8, we are going to bring our Fibonacci from the high to the low right here. Okay, so with the Fibonacci from the high to the low, we can see clearly that prices is at the 61.8. Price is currently trading at the 61.8. This lets us know that what if we had any buy opportunity, we have gotten to the maximum available to us, and we should be looking for a sell trade opportunity at this point. Okay, so now that has been noted, we've seen prices trading around 61.8. What are we going to do? We're going to drop an horizontal line at the 61.8 to indicate that area as a key reversal area of prices, since we are trading against the trend, against the flow of the market. Okay, so now we'll go down to the weekly time frame, and on the weekly time frame, we're going to see if a structure has been broken or what's going on the weekly time frame. So on the weekly time frame, we can see prices make what? Push, exhaustion. This is a big fractal. Then we can see prices go and make small fractals of push, exhaustion, push. Okay, now the question is, what separates this fractal from this fractal, and what makes this fractal a smaller fractal to this fractal? Okay, it's important to know that fractals are measured by their exhaustions. Okay, it's measured by the length of their exhaustions. Okay, not by the length of their push, but instead by the length of their exhaustions. Okay, so I'll bring my crosshair tool here. and measure this one from the high here to the low. This is 641 pips. Let's go ahead and write that out. 641 pips. Okay, I'll also go and measure the next one, the next exhaustion of the next one. This is 369 pips. Let's write that out. 369 pips. Okay, so this has let us know that this fractal here, push exhaustion, is a bigger fractal in comparison to this fractal here. This means that with this smaller fractal here, when the break of structure happened here we've seen a clear break of structure. Price was on higher highs and higher lows, and right now we saw that we've seen a close below the last higher low. Prices created a lower low. Now, since there's a break of structure, we know that the maximum trade opportunity available to us in the direction of trend this time around is the 100.0 right here. Within the context of the broken fractal, that is what we don't have business below here. We have no business below the next fractal. Okay, within the fractal available to us, this is our exit right here. Within the broken fractal, that is our exit. We don't have business below here. If prices now goes and breaks below, then prices has now broken. In that case, we'll now say, okay, price has broken the overall fractal. If prices comes and breaks below, then prices has gone and broken the overall fractal. In that case, then price is coming to the 100.0 of the broken fractal. But we trade within the context of fractals. Okay, so now we've seen clearly that this is push exhaustion. This is a bigger fractal. Okay, and we know that we cannot go from a big fractal to a small fractal. We have to separate these fractals. Okay, we can go from a small fractal to a big fractal. That is we can merge a small fractal to a big fractal together. But when we see a big fractal, we have to separate it with a small fractal. Okay, let me show you a quick drawing right here. If this is a big fractal here, and we now see prices make small fractals. Remember that fractals are measured by the exhaustions, right? If prices comes like this and breaks this structure, the maximum exit is here. Okay, we don't have, because the small fractal is the one that was broken. We have no business with the big fractal right here. Okay, since the small fractal was broken, this is the maximum exit at this point. This is the exit, since it is the small fractal that was broken. Okay, so that's how you separate small fractals. That's how you separate big fractals and small fractals. But on the other hand, if we see prices make small fractals like this, push exhaustion, push exhaustion, push exhaustion, and prices makes big fractals of push exhaustion, push break, and there's a break of structure here. It is all of the structures from the beginning here that has been broken. That is what the big fractals dominates the small fractals. Okay, so you should understand that concept very well. It's pure price action concept, okay, when it comes to the trading of fractals. Okay, so one thing is sure, this is push exhaustion, separate the fractals here, and we've seen a break of the small fractal at a key reversal area. Okay, the key reversal area at this point now is the 61.8. Key reversal areas are important because they let us know that, okay, key reversal areas are elements that let us know that prices may not be able to go beyond that level. Okay, key reversal levels are the first levels that let us know that, okay, prices might be ending at this level. Okay, if price is on a bullish structure, it might be ending at this level. If price is on a bearish structure, it might be ending at this level. So this key reversal area of 61.8, okay, has triggered prices to break a structure. We can see that even though prices went and traded above 61.8 on the weekly time frame, it still respected it and it acted and broke the structure. Okay, so now there's been a break of structure. Okay, eventually we know we are coming here to the 100.0 of the broken fractal. Okay, but there's something. Whenever we see a break of structure, we usually see a natural 61.8 retest. That is when a break of structure happens, before prices get to the TP, we usually see a natural 61.8 retest. Okay, that is what prices would come and retest the 61.8 of the high to the low. Okay, so we can see that what prices is currently trading at the 61.8. Okay, this is what push exhaustion, push break of structure right here. This is our eventual TP. These are take profits. But we usually see a natural 61.8 retracement before prices now comes to our take profits. The 61.8 retracement happens about 80% of the time, so it doesn't happen all the time. Okay, there are some times that what we see a break of structure and prices goes straight to take profit. That happens and that is okay. But usually about 80%, 90% of the time, we see prices go and make a natural 61.8 retracement. Okay, and the reason prices goes and makes a 61-point retracement is that what price is coming from an higher high. Okay, prices made a lower low right here. So prices wants to go and catch more bulls here by making more BS, in this case, by making another lower high. Okay, because we know that what a combination of a bearish structure is a lower highs and lower lows. So prices wants to go catch more BS before eventually coming down to take profits at this point. Okay, but now that that has been noted, we can see price trading around 61.8. Okay, so what is our job right now? Okay, our job right now is to go and look for what a break of the structure that took prices to 61.8. Okay, and sell to 100.0 of each fractal, sell to 100.0 of each fractal till we eventually get to this point. Okay, so we are going to sell to the 100.0 of each fractal, sell to the 100.0 of each fractal till we eventually get to this point. And also, it's important to note that what prices moves in wave patterns. So we as smart traders, what are we going to do? We are going to be selling to the 100.0 of each fractal, buy for a retracement. Sell to 100.0, buy for a retracement of each fractal till eventually prices come to this level. Because it's important to note that prices does not move like this, except if there's a strong fundamental news. Instead, prices moves like this. So we are going to take advantage of the sell movement when it comes, take advantage of the buy movement when it comes. The sell movement, we know it's to 100.0. The buy movement, we know 61.8 at max. So that's how we are going to keep it going. Okay, so now we've identified the 61.8 where price is going. And like I said, our job now is to go down to the 61.8, look for a break of the structure that took price to 61.8 and sell to the 100.0 of the broken fractal and buy to 61.8. Sell to 100.0, buy to 61.8 of each of those fractals till we eventually hit the end of our tradable area at this point. If price now decides to break below, then price has broken into the new structure. Okay, so now we'll go down to our daily time frame. So our daily time frame again, this is the overall concept of that again. We saw prices make what? Push, exhaustion, push of the same fractals, now break of structure. So break of structure, prices is eventually coming to this level here. But it's only natural that when prices break structure, most of the times prices goes for a 61.8 retracement. But we are now going to go and read the structure that took prices to 61.8 and sell down to the 100.0 of each fractal. We're going to take them fractals by fractals till we eventually get to the low point right here. Okay, so now let's go to the 4 hours to identify the structures clearer. And I'm using the 4 hours because it helps us identify the structures clearer. So from the 4 hours, from the low point right here, we can see prices make a push. We can see prices come for an exhaustion right here. We can see a push again, then we can see an exhaustion. Now, our job now is to see if they have the same fractals or not. Okay, so I'll bring my crosshair tool from the peak right here, take it down to the lowest point of the exhaustion. This is 269 pips. Let's go ahead and write that out. 269 pips. Then the next one, we'll bring it out from the peak here to the trough here. This is what 242 pips. 242 pips. Then I saw prices make smaller fractal here again, of the next push and exhaustion. This is what 132 pips. 132 pips. With this exhaustion again that prices made at this point, let's see. Let's just measure all the push and exhaustions, before we go to the top. This is what 233 pips. 233 pips. Okay, so one thing is sure. Okay, from the beginning here, this is a bigger fractal, push, exhaustion. This fractal is even bigger than all the fractals above. Okay, so that's a bigger fractal. This fractal is small to the starting fractal, so we have to separate them because you cannot go from a big fractal to a small fractal. You have to separate them. Okay, so this is also a bigger fractal, and this is a small fractal in comparison to the first one, but this fractal is bigger in comparison to the next one because this is what 132 pips. Okay, then prices went to make what 233 pips. So remember, you can go from a small fractal to a big fractal. So this is correct. This means that what if there's a break of the structure, for example, if there's a break of this structure, okay, this is our maximum right here. Okay, so now like I said, let's go ahead and take it again. This is what push, exhaustion. This is the biggest fractal here, separate. Okay, then we see prices make what push, and exhaustion. Now, this push and exhaustion that prices made is a smaller fractal in comparison to the previous fractal. Then now prices went and make push exhaustion. Now this one is also a smaller fractal in comparison to the previous fractal. So now what do? This fractal now will separate it. Then this is a smaller fractal, push exhaustion. Then prices now went and made what? A push exhaustion. Now this fractal that prices made now is bigger in comparison to the previous fractal. So they go together because you can merge a small fractal with a big fractal. So now we saw prices made a push now and prices made an exhaustion. Now the push and exhaustion, now we are going to calculate the fractals with the length of the exhaustion from the low to the high. Here, this is what? 181 pips. While this one, like we said initially, was what? 237 pips, which means they are of different fractals. So now we are now going to go and separate this fractal. Okay, so the fractal has been separated. So because what? This fractal right here is bigger than the next fractal. Okay, and remember that what? We have to separate a big fractal from a small fractal. Okay, so that means you cannot go from a big fractal to a small fractal, but you can go from a small fractal to a big fractal. Okay, these are straight price action rules. So now this fractal has been separated. This means that what we saw prices made a push again, an exhaustion right here around our key reversal area. You can see the red line around the key reversal area of 61.8. Then we saw prices make what? A push, an higher high. Then we saw a break of structure at this point. Okay, so now what factored the break of structure? Okay, let's go and focus on that point. What factored the break of structure is the break of the last higher low at this point. Clearly, we can see that what if we put it to line charts, we can see that this low right here has been broken. Okay, we can see prices that created a new low at that point there. Okay, so something is clear, price has broken a structure, okay, at a key reversal area. This is a structure that has been broken. Push. Okay, sorry about that. This is a structure that has been broken. The structure of push, exhaustion, push, higher high, clear break of structure. So there's been a clear break of structure at a key reversal area. This lets us know that our direction of trend price is eventually coming to the 100.0 here of the broken fractal. That means that this is the 100.0 of the broken fractal, because this was the fractal that was broken. Okay, it has no business. Our current trade opportunity has no business with this big fractal here, because this fractal here is a bigger fractal. Okay, by the time prices comes and breaks below, then price has broken the bigger fractal and price is coming to the 100.0 here. By the time price breaks below, then price has broken this big fractal here and price is coming to the 100.0 here. But within the context of our current tradable area, it's a small fractal that has been broken of push, exhaustion, push. And this is where the break happened and price is coming to its 100.0 of the broken fractal in the direction of trend right here. Okay, so now that we already know where we are taking our profits, our next job is what? We know clearly that after a break of structure, we usually see a natural 61.8 retest before coming down to this level. Okay, and we know our trade entry variations. Okay, what are our trade entry variations? I'm going to draw them down for you. Whenever a break of structure happens, this means that we enter our trade only when we see a break of structure. If I tell my students I'm in a trade, their next question is, where did the break of structure happen? Okay, so whenever there's a break of structure, what is the next thing we do? We can sell here, put our stop loss here, and sell to the 100.0 in the direction of trend. In that case, the next thing we can do is we can wait for a 61.8 retracement and sell pinpoint at 61.8 retracement with our stop loss at the high and sell down to 100.0. The third thing we can do is the structure that took prices to 61.8. We can look at the fractals on smaller time frame and sell at the break of the structure with the stop loss at the low, put the entry at the low, put the stop loss at the high, then sell to the 100.0 right here. So these are the different ways we can trade. These are our 3 different entry variations. Okay, so in this case now, we've seen prices make push, exhaustion, push. We've seen a clear break of structure. This means that you could have sold here, put your stop loss at the high, and sell to this level here. You may not have gotten the best risk reward, okay, because it will probably be a negative risk reward, because it's going to be a situation of you entering around here risking about 196 pips for 118 pips. It's not a good risk reward. Okay, so what are we going to do? In that type of case, we are going to be smarter, knowing fully well that what a lot of times when a break of structure happens, we see a natural 61-point retest. So instead of selling, we are going to wait for a buy opportunity to the 61.8 of the broken fractal. Okay, it's also important to note that whenever you are trading against the natural flow of the market, okay, apart from 61.8, you should also watch for what? Look left and watch for strong areas of support or resistance, as those can also trigger prices to continue in its natural flow, okay, in its natural or in the overall direction of trend. Because remember that what, if I'm buying right here, I'm trading against the natural flow of the market. So even though I know that what prices always gives a natural 61-point retracement, sometimes I don't exit to the overall 61 point. Sometimes I exit at the 61.8 of the broken fractal. That is the best. Okay, so now I'm going to bring up my Fibonacci from the high here to the low. Okay, so my Fibonacci from the high to the low has let me know that what, okay, there's a strong, this 61-point level is where price is eventually coming. This is what, push, exhaustion, higher high, break of structure. Price is eventually coming to 61.8. Okay, but instead of exiting at 61.8, what am I going to do? I can see a strong support level here. Now I'm going to go down time frame to the 1 hour and see how significant that support level is, and if instead I should exit my trade at that level. Okay, so I'll go down to my 1 hour. Okay, or even go down to as low as my 30 minutes. Okay, so you can see how we infuse all these time frames together. Go down to as low as 30 minutes. Okay, so now we know that what this support level here, okay, we know that at this support level here, this was where the break of structure happened. Okay, the break of structure happened at this support level here, and when the break of structure happened, this area can also trigger what, a retracement. Okay, so now we are going to identify the structure. Okay, we can see prices make high here and low, lower high, lower low, lower high, and same fractal, lower low. Okay, this is the lower low right here. Okay, so that is for the bigger fractal. Okay, so but now within the context, there is also a smaller fractal that starts from here. Okay, the smaller fractal starts from this high. Okay, this means that what, we saw prices make a push right here. We saw prices make, okay, let me draw it out so it's very clear. We saw prices make small movements here, and all of this were the push. We can see the exhaustion right here, and we saw prices made a push here to break that overall structure. Then prices came back here, you know, and broke the structure here. We can see a break of the last lower high. Okay, so when we see a break of the last lower high, like I said, you can buy pinpoints, put your stop loss at the low, then buy now to the 61.8 of the broken fractal. So what is the broken fractal? We'll bring our Fibonacci from the high right here to the low. Okay, so this 61.8 is the 61 points of the broken fractal, which also coincides with what, a strong support level right here. This means that what, my exit is going to be at this 61.8. Okay, because it is 61.8 and it also has strong support levels here. Okay, so this means that I'm going to exit at the 61.8, even though there's a probability that eventually prices might come to the 61.8 of this big one right here. But this is a strong level here, and this is the 61.8 within the fractal of my opportunity. So I'm going to exit at the 61.8 here. Okay, so this big structure here of, okay, just a moment, this big structure here of push, exhaustion, push, lower high, lower low, exhaustion, and lower low has not been broken. Okay, this big structure has not been broken. The structure that has been broken is the structure that starts from here of push, exhaustion. This is a small lower high. You can see small fractal here. Push, break of structure right here. When a break of structure happens, we know that what, okay, we are buying to the 61.8. Okay, we are almost at take profit on this trade. You can see prices trusting into take profit, and I had to make this video so you guys see the process of it, not just when it hits take profit, but you see the process of how it moves to take profit. Okay, so something is clear. We've seen a break of structure at this point here. I'm going to bring out the horizontal line and identify it. Okay, there's been a clear break of structure of the structure that starts from this high here to this low. So this is the fractal of which we are currently trading at. This is the push, exhaustion. This is the push to this level, break of structure. Okay, so now when a break of structure happens, just like I told you guys, you can buy pinpoint at a break of structure, put your stop loss at the low, and buy to the 61.8. In this case, since we are trading against the natural flow of the market, or you can wait for prices to give you what a natural 61.8 retracement and place your buy at 61.8. For me, I placed my buy at 61.8. Okay, I waited after the break of structure, I waited for price to come back to 61.8, and at 61.8 I picked my buy entry here. I put my stop loss at the low of about 17 pips. Okay, and I'm buying to this level here of about 77 pips. Okay, so if we are going to calculate, divide the 77 pips with 17 pips stop loss, this should probably give us about a 1:5 risk reward. Okay, so that means that what on this trade we should be getting a simple 1:5 risk reward by just what saying what a simple break of structure right here, waited for a natural 61-point retracement, and I placed my buy pinpoint when prices got to 61.8 with my stop loss at the low. And what we can see, prices trusting into victory right now to my take profit, and very soon we'll get to our overall take profits here at 1:5. And I took this trade, this particular trade is I'm less than 24 hours in this trade, and I'm about to make a 1:5 risk reward on this trade, just using our clear knowledge of price action. Okay, and we both know that what by the time prices gets to what this 61.8 level here, what am I going to be doing? I'm going to be waiting for prices to get to the overall 61.8 here. Okay, I'm not going to be entering the trade. Instead, I'm going to be waiting for price to get to the overall 61.8 here. And by the time prices gets to the overall 61.8 here, I could give a sell pinpoints. Because at the end of the day, this is what push exhaustion, push break of structure. Okay, prices went to a 61.8 retracement. Okay, me, I'm buying to the support level right here instead of going to the 61.8 because it is a bit risky. Okay, but at the 61.8 here, I'm going to sell pinpoints here, put my stop loss at the high, and sell down to this level here because this sell is active. So after the buy, I already have a sell opportunity waiting for me to this support level here. Okay, this one will give me another massive risk reward again. Okay, another thing is what I can also watch the structures that took prices to the 61.8 and what sell at the break of the structure. Put my stop loss here, put my entry here, and put my stop loss here, and sell to the ground level. Okay, so these are very important. These are very important to note. Another thing that is important to note is that this support level here at the 61.8 of the broken fractal can also send prices to break structure. Okay, that is another reason why I'm exiting at this particular Fibonacci 61.8, because this is the 61.8 of the broken fractal, and it also has a strong support level as we can see here in game. So this 61 point can also send price to break structure. Okay, so if I see a break of structure at this 61.8, what am I going to do? I'm going to sell here, put my stop loss at the high, and price is going to go from there down to take profit at the support level of our fractal right here. Okay, so as soon as I exit the buy opportunity, I'm just going to wait for prices to give me, okay, if this price is exiting at the 61.8 of the fractal where I entered from, is it exiting there? Then that's fine. If it exits there, me, I'm going to exit my own trade there. But if price decides to break structure there, it's fine. That means that price is not going to the overall 61.8, and this will be a good sell for me down to the 100.0 right there. Down to the 100.0 at this level here, just like I've shown. At this level, let me draw out at this level, down to this 100.0 right here. Okay, so or we could what? Still exit our prices at that 61.8 and see if price would come to the overall 61.8. If price comes to the overall 61.8, then it is, then I could sell pinpoint since it's the overall 61.8. Then I don't have to wait for a break of structure. Instead, I can sell pinpoint here and put my stop loss at the high, because I know that all of these are just a 61-point retracement. Or for a better risk reward, I could decide to wait for a break of the structure, sell and put my stop loss at the high, and eventually ride to this level right here. Okay, so at the end of the day, all of that will just be push, exhaustion, push, break of structure right here, 61-point retracement down to the 100.0. And this is the result of the trade. After a couple minutes, prices hit take profits. Okay, if we bring out the Fibonacci from the top to the bottom, we can see prices hit the 61.8 for our take profit. Okay, this is a very beautiful trade, and like I said, we are going to go on and be looking for a new trade opportunity. But this is how we trade. So simple, breaking the chart down using a simple price action driven multi-time frame analysis approach. If you're looking forward to learning more and you want to learn, understand, and master the art of price action, I have a mentorship program that you can join on in. The link is in the description below. You can join the mentorship program. And if you want to join the free Telegram, the link is also in the description below. You can hit me up, text me up on Telegram, and I'll be there to guide you and take you through. See you on the next video, guys.